Deeper look at what all of this means for Disney, Apple, and the rest of big media streaming players. I want to bring in Gene Munster. He's the founder and managing partner at Loup Ventures. Good morning to you. You saw this news, and I imagine, at least in my mind, I said this was going to happen at some point, no?
Yeah, it does. I think what's core and what's important to keep an eye on here is the big picture, and ultimately is core to Disney's future is streaming. This is a nascent business for Apple, but as you said, is that it created a perception of a conflict, and Iger, in fact, did the right thing by stepping aside, reminiscent of 2009 when Eric Schmidt, who's on Google's board, had to step aside because of as Android was starting to ramp. This is competitively a much different dynamic than 10 years ago because obviously Android and iPhone are a big part of Apple's business. But I just want to emphasize this one piece. By definition, there is a conflict here because Apple is in the video streaming business too. But this is a big deal for what Disney's doing. Disney has these iconic IP, whether it's everything from the princesses to Marvel to Star Wars. They have an opportunity essentially to fundamentally change their business by creating new storylines that ultimately feed the theater. That's very different than what Apple's business is, which is 40 unique series. And just one quick final point, Andrew. I want to try to put some sense about the size of the numbers relative to each of their businesses. If Disney is successful at replicating what Netflix did, which is 150 million subs, that would essentially add 20% to Disney's business and the opportunity to create new catalogs and really fuel what they're doing. If Apple is successful, similar 150 million subs, it adds 3% to Apple's business. And so this really, at the end of the day, is more negative for Netflix than it is some commentary on Apple.
But let me ask you about Apple then. You think the opportunity for Apple is similar? That's surprising.
I was just illustrating that if they had the same number of subs as Netflix, they get $60 a year versus Disney would get $84 a year, kept similar pricing. Just given the size and numbers that Apple is relative to Disney's $60 billion business, Apple's a $70 billion business. So it's just simply the numbers. This is a much bigger deal for Disney than it is for Apple.
Gene, on Apple's front, though, and we were talking about this in the last hour around Amazon as well, given all of the regulatory pressures, and I know we talk virtually every other day with you about sort of big tech in Washington, how hard is it? I mean, how hard do you think it's going to be for Apple in terms of as they roll this product out, given all of the questions that Washington has about tech companies advantaging their own services over others?
Well, it's going to be, this will be the topic, I think, that is where Apple, I think they are low on the risk profile, but you are getting to what the edge be that regulators will address. And simply put, is their base of 1.4 billion devices gives Apple an opportunity to preload, for example, the Apple TV app on there that may have some prompting for subscription entering Apple TV Plus, or, for example, what they're doing around device sales and giving away a year subscription of TV Plus with any device sale. So they're going to get a massive amount of users. I mean, think about this. If they sell, call it roughly 190 million iPhones in the next year, those alone, they're going to have more than 200 million subs. This is going to surpass Netflix essentially in 12 months.
So,
but,
by the way, if you have 200 million subs, how
you.
many of those 200 million subs do you think will be active? Meaning people are going to have the phone and actually watch the programming.
I think a lot will. I mean, it's not going to be, I don't know how many hours per month, but the content, I think, is of Apple's quality. And I think it's going to get, I predict that in the next 5 years, Apple's going to win an Academy Award with some of this content. So I think this is premier content that they're putting together, incredible production value, great storylines. I'm not a critic, movie critic, a television critic by any measure, but I think that people will watch it. I think it does beg the question of a year from now, will people continue to sign up? The answer is yes. I think that they will for $60 a year. A lot of people will stay. And I don't want to turn the conversation. It's easy to pick on the front runner, Netflix in this case, but I just want to try to angle it towards something that may be useful, is that ultimately the issue here is that Netflix has raised their price since 2014 8 times for collectively a 62% increase. That's been a big power. I don't think people are going to be shutting down their Netflix account because of Disney or Apple. But I do think that pricing leverage essentially evaporated with this new environment.
Right. Hey, Julia, you're still in LA. You want to join in?
It will just be interesting to hear, Andrew, what all of this means for the rest of the services that are going to be entering the game after the launch of Disney Plus and Apple TV Plus in November. Remember, we also have HBO Max launching, and then NBC Universal is launching a streaming service that's going to be focused on ad-supported content, sort of going a different direction away from these subscription models that don't have ads included. So it's worth noting it's not just about these players. It's going to be an incredibly crowded space with different products that are going to be appealing to different consumer bases, but also there's a question of how many people will be willing to sign up for, and arguably the lower than expected price for Apple, the $5 a month for their service, means that it could be more of an add-on rather than replacing something, but there certainly will be a limit of how many people will pay for it once.
Hey, Gene, jump on this issue, because she just mentioned Time Warner and obviously HBO Max. Randall Stevens is going to be in New York talking at this Goldman Sachs conference tomorrow, talking about tying things together. We have yet to see really AT&T take advantage, if you will, of HBO in terms of promoting it using all of its channels. What do you expect there, especially given the new pressure from Elliott Management on that company?
I think what you're going to see with AT&T is this greater focus on retail, and I think pushing products through their retail, whether it's online or in-store. So I think this HBO bundle, I think we're just going to see more combinations of bundle, more advertising around that. And ultimately, it plays back to this general theme, is people are going to have a lot of these services, whether they get them through their carrier or through some device purchase or just outright. And I think it is changing the pricing expectation for consumers, which has long stood at $13 a month. I think that is going to decline.